Hey, what's going on, guys? It's Blanc here. This is my second take of this video, but anyways, this is the first episode of the series that I will be making, as I've mentioned in my first introduction video, and this series will be about me recording myself when analyzing the charts, and then entering the charts, and then um giving myself feedback as well as reflection. So basically, there will be three phases of me having an analysis again, an entry, and then reflection and feedback. So as I've said in my previous video, this is just a documentation of every trade setups that I'm gonna be taking, so I can look back in the future and then analyze and see where I've been wrong or what areas I can improve on, and as well as sharing it with you guys. And yeah, let's get right into it. So in the daily time frame, again, this is very bullish. Okay, oh, I forgot to mention that I'm gonna be looking at gold for now. I want to trade one pair, or I am also looking at these pairs. But for now, I'm gonna be looking at gold and maybe some of the indices, but it depends. But for now, I'm looking at gold. So, but don't worry, I'm gonna be recording myself if I will see trade setups on these pairs. But these pairs are like my main pairs, but my main pair is gold, and I want to to familiarize with myself with this pair. Again, the price actioning on gold is ready to break out the all-time highs, but we are in a supply zone. You know, we are in a supply zone, and if you will see here, we also have a demand zone. So if you've been trading gold for like a long period of time, I've been trading gold since last year, July 2024, and I realized something, that if the price is ready to like break out the highs, it will have, or it will consolidate for a bit, you know, that if price goes up right here, it will not just break to like that. Sometimes what it does is like touch the supply zone and then have a bearish market for some time, and then after that reversal phase, it's now ready to go up and up and up. So well, that's just my like my observation based on based my observation before, but we will see. This is just my analysis for now. So we have a fair value gap right here, daily fair value gap right here, and then we also have a daily fair value gap right here. So these are my zones in the daily time frame. And then the 4 hour time frame. Oh, I forgot to mention that we are in the date today is January 27, 2025. It is Monday, and it's 9:37 a.m. Philippine time. So yeah, I am from Philippines. So my time zone will be different from the other viewers. So just take note, I am from Philippines. So yeah, in the 4-hour time frame, as you can see, we can minimize the demand zone right there and right here. And then we have on the daily time frame we have a gap right here. But on the 4-hour time frame we don't have a gap. But we can also minimize this level right around there. Let's mark this as a daily fair value gap. The market structure is very bullish and we are in a small reversal phase in the 4-hour time frame and in the 1-hour time frame. I'm gonna be I should be careful with this fair value gap because the daily, it is the strongest for me. It's the strongest time frame for me because sometimes the price action depends on the higher time frame. So in the 1-hour time frame, our fair value gap will be here. And then we can divide our zone, our demand zone into two. And the other demand zone is right here. So you may ask how and what like are my checklists on choosing a demand zone. So when I am choosing a demand zone, I first look into the sell to buy candles and as well as the fair value gap above it. If it has a fair value gap above it, it's a high probability setup, and if it has a like a doji or a sell to buy candle, it's a nice demand zone. And then you will see there that the price action will have a reaction right there. So yeah, so I divided it into two since we also have a fair value gap right here that can be filled by the price, and we have a liquidity right here because this level is many traders will enter here on this level, and their stop loss can be right above this level on the on the week of this demand zone. So that can be a liquidity, so I have to be careful with that. And yeah, that's my daily time frame. And then the 15-minute time frame, this is basically the 15-minute time frame. This is where I based my intraday setups and intraday opportunities. So yeah, the 15-minute time frame on gold is nice. So yeah, price is just melting and it's ready to fill this fair value gap, as you can see. Let me just pull that off. Okay, so yeah, I'm gonna be honest, guys. If I am trading really right now, I'm gonna be looking for sales right here. But again, I want to build consistency and discipline. And yeah, I do not want to. I'm removing all my bad habits, because before my mindset was like, if I see an opportunity, I'm gonna grab it. And that mindset bring me to more losses. Why? Because if I were to take every trade, I'm basically, in simple terms, I'm basically over trading. So before, on one day, I am taking 50 plus trades. So that made me like lose more money, and especially my mental my mental estate, my mental real estate is like I would say decreasing, and it messes up my mental game. So I'm gonna be removing that habit. I will just took I will just take minimal trades for now, and I will just use these videos to reflect and give feedback to myself. But again, enough of my rambling. Uh, let's go to the 15-minute time frame. So in the 15-minute time frame, as you can see, the market structure is bearish, right? So we have a break of structure right here, and then a break of structure right here. So if this candle closes below, I will be marking this level as a breakup structure if this candle closes below. So right now we are in Asia session, and the market is bearish. So I'm gonna be marking this as a liquidity, because this is, as you can see, this is a liquidity because traders right here sell from that level. But anyways, we are looking for buys. So yeah, as you can see, as you remember, this is a higher time frame fair value gap, but we have a demand zone right here. But in the higher time frame, it is a fair value gap. That is why I will not use that level. Why? Because if it is a fair value gap on the higher time frame, it might be filled by the price, and this zone can be a liquidity. So I will be looking at this zone only, this zone below. So for me to enter, my confirmation, the confirmation that I'll be waiting is just fill this fair value gap, and then if this zone touches, the price touches the zone, I will just wait for a lower time frame market structure shift, and then have my entry right there, and then my stop loss will be right around this level. Actually, this level is liquidity level, so I should be aware of that. I'm gonna be careful with that zone. But if the price tells me that it is ready to go up, I'm gonna be taking the opportunity. So later I will just wait for the price to come down here, and then I will look at the 1 minute, 3 minute, and 5 minute time frame for me to look for zones as well as a market structure shift. So yeah, that's pretty much my analysis. This video is pretty long because I am telling you stories, guys, and yeah, I will try to make this episode short to my upcoming episodes. But in this video, I'm gonna be just letting this out, letting this video come to like 15 minutes or 20 minutes more. But yeah, that's my analysis. I'm gonna be coming back later on the entry. Hey yo guys, it seems that the price action on gold in the 5-minute time frame is having a reaction on the demand zone that I marked out earlier. So for me, I'm just waiting for a confirmation of a market structure shift and then a breakup structure. But for this one, I am a little bit unsure for what would be my best confirmation, but if this shows like a market structure shift like this, market structure shift only like this, and then it will show a breakup structure like that, I will have an entry. So I'm still waiting. I'm still waiting for a better confirmation because I do not want to enter, you know, uh, anything around here without having a confirmation, because that will not make any sense. So yeah, I will get back once this shows my desired confirmation. Hey, what's going on, guys? Just an update. It's been around 3 hours later, and the price action right now aligns with the path that I labeled a while ago. So yeah, for now, I am waiting for the breakup structure right here. This is a lower time frame breakup structure that will align with the market structure in the 1 hour time frame. So it also um, tapped that demand zone right there, right here. So yeah, it's a valid trade, but we need more confirmation. So the confirmation will be waiting for this to be broken. So I'm just waiting for this one, and yeah, we will see. We will see. Hey, what's going on, guys? Just an update. I am currently in a trade. So I've entered right here in this level because there is a breaker block right around in this area. So on the 15-minute time frame, as you can see, the price can go back here, but you know, we've secured this position. But again, it's not the best optimal position in my opinion, but I would say that it still has a probability to continue the uptrend since we have a market structure shift. So I'm gonna be updating you guys on what will happen once the trade is done. If this will be a losing trade or a winning trade. Hey guys, today is the next day since I placed the trade. So as you can see, I've lost in this trade, but if I closed in this level right around this supply zone, I would have 2R 2R win. But my initial target was this swing high. So it's tough, but it is what it is. By the way, guys, I bought a challenge, a $5,000 challenge. So my initial risk around this area is around 70 dollars. So that's 1.3%. So that was my initial risk. My entry was here. So I just waited for a market structure shift in the 5-minute time frame, and then also waited for a break of structure. And then once the price took this liquidity, I waited for a little pullback right around this area, and then when I saw that it had some reaction, I entered. And then I just waited for a little bit before I added positions. So I added positions right around here when the candles did not close right around this level in the 2762 area, 2762.6 area. I mean 0.75 area. So yeah, I was up around $120 right here, and out of nowhere it took all this trend line liquidity, and then it just melted right around the start of the New York session. So as I've said earlier, if the DXY will not break these highs, I will not close my position. So when this happened, these candles happened, I was a little bit I thought that, the price on gold will have a will continue its trend to the upside, but it didn't. So the market structure that it followed is the 15-minute market structure. So yeah, that's pretty much the trade. And actually, I have one error. I added position right here when it had a reaction right in this demand zone. So this was also the time that the DXY is having a pullback right around in the demand zone. So yeah, it was tough. It was tough, but it's okay. I realized I've learned something. Uh, we have to pay close attention to the XY, because if I were to go to the higher time frame in the XY, we touched a significant demand zone. As you can see here, we touched a significant demand zone. So it will also have a reaction right here, as well as I think there is a meeting in the Fed. So yeah, it had a reaction right here. So I will place close attention to the XY next time, and then I will follow my risk management, because in this trade I've added position, an unnecessary position, because we got back down, and then it just go to my stop loss. So yeah, that's the trade, and it's a loss, but it's fine. There's always another day. So on my next video, we will see if I will have an opportunity to place a trade. So be sure to subscribe, guys, if you want to follow my journey on improving, on wanting to be a consistent, profitable trader. So thank you, guys. That's it. Peace.